Welcome to this week's Forex forecast for the week ending February 17th, 2023. My name is Justin Bennett with Daily Price Action, and in today's video, we are going to talk about the dollar, the DXY, the euro, the pound, the dollar yen, and also the Australian dollar versus the New Zealand dollar. Now, before we get into the analysis, I do want to mention that I did just launch a free swing trading course on the website. It has 31 lessons and several hours worth of video content that you're only going to find in that course. So if you look in the description here on YouTube, you'll find a link to that. And if you're on the website, click on that free course link at the top of the site, and it will take you to the page where you can sign up for that. It's instant access and completely free. Now with that, you're also going to get the newsletter, so the daily emails Monday through Saturday with a setup inside of each one of those emails. Okay, so let's go ahead and jump right into this now. Looking at the DXY here, the US dollar index, this is the daily time frame, and this is the same descending channel that we've been looking at now for the past few weeks. And you can see where so far the DXY is holding above this level here. So this is the top of an equidistant channel. And you can see that the bottom portion of this level or this pattern here is much more defined than the upper level. However, again, this is an equidistant channel, so these levels run parallel to one another. And you can see where off of this upper level, the DXY closed above it here on February 6th. And ever since that time, it has held above it on a daily closing basis. So as long as this is the case, we have to respect this here from the dollar. Now, last week was very sideways, okay, with the dollar just moving, sideways here for several days. And it is kind of just flirting with that 103.50 area, which you can see back here has been a key horizontal for the DXY for the last couple of months. Now we saw the close above it here, the close back below it, and then it kind of became resistance here for a couple of days. But then Friday we saw a close just above that mark. Okay, so I think that the first 24 to maybe 48 hours of the new week are really going to tell us where this is going to go. Do we get a continuation and a convincing close up here above 103.50, or do we get that rotation lower and a close back below the top of this channel? Now, in order to see dollar weakness, we would really have to see a close below the top of this channel, but then also below this area right around 102.60. But again, as long as the market is holding above this area right around 103, we have to respect this breakout from the dollar. Now, as for resistance here for the DXY, you're going to be wanting to look at this area right here, this congestion area, somewhere around like mid 104s. Okay, so like right around like 104.40, maybe 104.50. I do think that this area is going to attract a lot of selling pressure here on the way up if we do get that rally. But the next key horizontal to keep an eye on here for the dollar, if we do get that rally, is going to be this level up here, right around 105.60. So next up we have the EURUSD, and I mentioned this one last week, this area right around 107, okay, 1.07. This is a confluence of support, or at least it was before Friday's breakdown. Now you can see this trend line here extends off of the high from back here in October. We've got several lows along this level, including this one here from last week. So the market held above it here for a few days, but then Friday closed below it. Now, the thing about Friday breakdowns or even breakouts in general is the fact that we do have lower than usual volume. So you have to take that into account when dealing with something like this here, where we got the breakdown on Friday. So just like the DXY, the first 24 hours of the new week should confirm this for the euro. So we either get a close below this area here, which is going to become new resistance right around 107. So if we get the close anywhere down here, then that would confirm the breakdown from the EURUSD. And alternatively, if we get a close back above 107, okay, so this key horizontal right here, and also that trend line, if we were to get a close back inside of this area, then it would confirm that this down here was a bullish fake out and expose higher levels. But just like what I mentioned with the DXY, as long as the market is holding below that 107 area, we have to respect the breakdown that we saw here on Friday. Okay, now one key area to keep an eye on, it's a bit minor compared to that 104.80 region, but this region right through here. Okay, so you can see that we've got a lot of congestion from the euro back here. So right around like 106.30 or so in that general area, I do think that we could see some demand right around that area if we do get the continuation lower this week. Okay, but the next key support level for the EURUSD, if we do get that continuation lower, is going to be this pivot right here around 104.80. Okay, so 1.048 would be the next key support level on the way down, but you are going to want to watch that area right around 106. And again, if we do get the close back above 107, given the fact that this was a Friday breakdown, you have to take that with a grain of salt. So if we were to get a close back above the 107 area, again, it would expose some higher levels like that area around 107.80 and also potentially 108.50. So I talked about the pound back here when it was closing below this trend line off of the closing price from September 26th, okay? So I drew the trend line here from the closing price because it makes more sense in this case. And as I mentioned recently too, it also removes some of the variability when you get a volatile candle like this here, okay? So from the higher time frame close off of that September 26th candle, you can see where the pound closed below this on February 2nd. Now, since that time, it is down quite a bit. However, the market is still just kind of range bound here and really has been for the past few months between 1.1915 or so, and also that area up around 1.245. So really, this has just been one big range for the pound over the past few months, and this is nothing more, at least so far, than a continuation of that range. So you can also see where the pound tested that level right around 1.212. Okay, so you can see this has been a pivot for the pound here over the past few months. And last week tested it on Thursday, closed below it, and then Friday we got the reversal. Now, again, I do think just like with the EURUSD, we do have some support levels on the way down here for the pound, including this area around 1.19, which is that range support. Okay, so I would expect a significant amount of demand down here. I would be surprised to see the pound break below this without some type of bounce, okay? So keep that in mind that this is going to be a very significant support level for the pound on the way down. Now, alternatively, if we do get a bullish move from the pound and the euro, you're going to want to watch this area around 1.212, right where the pound reversed last week. A daily close above that would expose the area right around 1.23, which has also been a key pivot for the pound over the past few months. So as of Friday's close, the pound here is still just sideways and has been for the past few months. So this is really just a range trade. If anything, you're gonna want to keep an eye though on this area down here, right around 1.19 support in the coming days. Now, if we were to get a close below that, then you're looking at a move potentially down here toward some of these lower levels, like these highs back here, right around 1.164 or so. But for now, really, it's just a story of the pound being caught here between 1.19 support and that area around 1.212. So the dollar yen, we saw a breakout here on this candle on February 3rd. So you can see we had this near perfect descending channel, and the market broke out here on this candle. It also closed above that 130.60 horizontal level for the dollar yen. Now, so far, the market is holding above this on a daily closing basis. However, really not that convincing in terms of these candles we saw on Thursday and Friday. Yes, the market is holding above it, so you have to respect that fact. But at the same time, this candle back here on Tuesday was also a bearish engulfing candle. So this kind of added a little bit of downside pressure here for the dollar yen. So really, it's caught between this high up here where we got that bearish engulfing candle and also support down here right around 130.60. Now, this isn't too much of a surprise to see the dollar yen going sideways, simply because we've seen the DXY doing the same. So I think that if we see the dollar yen take out this high up here this coming week, then we could see a run at 134.50, which is going to be the next key resistance for the dollar yen on the way up. And if we see a close back below 130.60, that would be bearish in the short term and could re-expose the top of this channel and potentially that confluence area that I've talked about down here around 126.70. Okay, so this area down here is incredibly significant for the dollar yen, to where if we were to see a close back below this level, this would be the area to keep an eye on. But so far, the dollar yen is holding above 130.60 on a daily closing basis, so we have to respect that fact. But again, it is going to find some selling pressure up here around 132.80, followed by 134.50. And last but certainly not least is the Australian dollar versus the New Zealand dollar. Now, this is one I don't talk about too often, and to be honest, it's one that a lot of traders forget about. And there's no surprise there, because if you look at the monthly time frame, really for the past almost decade, this market has just been sideways. And you can also see where it looks very choppy from something like the monthly time frame. But if you drill down to the daily or even weekly chart, you can see that we have some really nice swings that take place for this pair. Now, back here, I mentioned this in Discord for members back when the market closed above this area through here. And you can even see where we got a retest of this pivot here for the Australian dollar versus the New Zealand dollar as support right here on this candle. Okay, so we got that bounce. We got a nice rally here. However, since that time, over the past couple of weeks, you can see that this market has started to form a potential rising wedge. Okay, you can see that we have these highs up here, and we also have a perfect trend line off of that low from back here in December. So something like this typically points to exhaustion during an uptrend. Okay, when you get highs like this that come together to a point, and also a lower trend line that form what's called a terminal pattern, you can see where the market is approaching this apex area up here, where these two levels are going to come together, and the market's going to be forced to make a decision. Okay, and typically the way these patterns resolve is you get a break lower. So for this pair, you're going to want to watch this trend line down here this week, right around 1.095. So a close below that, okay, would open up lower levels, including this low back here, but also this pivot right around 1.075. And you can clearly see why that's significant. We've got support back here. The market broke down. It became resistance. We got the close back above it, and then it became support once again. Okay, so 1.075 is going to be significant if we get that rotation lower, that resolution to the downside. And also the fact that 1.075 is the 50% retracement of this latest rally. So not technically a fib level, but markets love to retest those 50% levels. And you can see where the 50% of this recent rally is right there at 1.075. Okay, so still a chance that we could see one more run at resistance up here. So keep that in mind as well, that as long as the market is above the support level, you have to respect the recent uptrend here. So potentially another run at resistance, but again, a close below this trend line right here. I think we're looking at a move, at least a retest down here around 1.087, if not a full retest of that 50% level around 1.075. All right, so that's it for today's video. I hope it helped. And again, I did just launch a free course on the website, so be sure to check that out. Look in the description here on YouTube as well. I'll have a link to it, below. And if you aren't subscribed to the channel yet, be sure to do so, and also click that like button to help out this video. All right, so that's it for this video. Hope you guys have a great rest of the weekend and trade well out there next week.